There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. I'm your co-host, Joel Elkanan, along with Malte Kaub. He's Managing Director of the Traders Leadership Council in London. How you doing this morning?
Very, very good. Thanks for having me on for the third time. Really a privilege.
Okay, I mean, we've had some activity here in the U.S. markets, but also have had some action over there in the DAX. Could you give us a little recap of the trading action and the trading psychology going on over there?
Absolutely. I'm very happy to provide you a bit of a perspective from the other side of the pond. US equities have been incredibly strong and I think we hit some volatility now. When you look at the fragmented European market, I suppose the German market is definitely an interesting one, really kind of driving the economy here in Europe and attracting a lot of investors. And we've until recently we've reached all-time high levels of about 10,000. These are unseen and unprecedented levels. And quite breathtaking at these highs, really fueled by the ECB and everything, probably not fueled by the fundamentals. And what we found interesting is that when we discussed the 10,000 levels with traders, everybody was uber bullish and everybody just wanted to buy and get in on it, and they all felt they missed on the performance. And recently we had a few pullbacks, and each pullback was a good buying opportunity in hindsight. And the last one really approached the 9,000 mark, and it was amazing in the last webinar that I run on Thursday at 7 p.m. UK time. Again, everybody was about at the 9,000 areas. Everybody was talking about selling at the lower levels. So it's really interesting to see, how the market levels play with the psychology of the people, and really everybody wants to go in at the highest levels. And when there is a decent pullback, which clearly provides some opportunities to get on board, then suddenly everybody wanted to sell at what actually was the lowest level. And when you look at performance today, we have already made up 1% compared to Thursday. There was no trading in Friday in Germany because that was a bank holiday.
Okay, and we had you on before the vote over there in Scotland, and you were pretty confident that wasn't going to pass. And
Yep.
yep, and it did it. But looking at the dollar strength here, I mean, what a quick rise. You think that's going to have a negative impact on the U.S. stock indexes?
The dollar strength is probably something that we've seen across the board now for quite some time. I suppose when you look at the micro picture, and I think coming back to the day trading, when you look at today's strength, it's actually the Australian versus the US dollar, or the Australian and the euro, who are, when you just look at today, who are the strongest. So I suppose it always is a question of the time frame, probably that you would be looking at. And until recently there was some correlation that risk on would meant actually that dollar would go down, and now it seems like really this correlation has broken. So I probably look at it. I look at two different pieces. Probably one is the currency piece, and that's really where I come from. And I think we've seen now some really strong pullbacks, and I wouldn't be surprised if that US dollar strength actually is to go for some time. And look on the other side on the S&P index, with all what we've seen out of the US so far. I think it really depends on the policy, what we're hearing from the Fed, if there's kind of more. If there's more room to the upside, but I wouldn't be surprised if that strength would actually continue on the US stock indexes. So my gut feeling at that point on my analysis would point more at a kind of a calming down of the US dollar, and probably a continued consolidation pattern, but on average a continued strength on the US side.
Okay, and just as QE is starting to wind down here in the United States,
Right.
Draghi is unveiling it for Europe. Do you think that that's going to have the same desired effect that it had in the United States?
That's a fantastic question, and it just put it a little bit in perspective. Look at where Draghi is coming from. Draghi is an ex-Goldman Sachs banker, so he will do whatever the markets kind of need to do in order to be strong. So I suppose he will not be able to escape that. Secondly, when you look at what happened today, when you see it's a sea of green, luckily in Europe, but when you look at the economic data that has been released earlier today in Germany, that was actually a disappointing number that came out there. Still, the shares are running to the upside. Why is that? It is that actually a slight disappointment, not a full disappointment, just a slight disappointment. Numbers coming out of Germany will just result in the ECB to be more precise and definitive in their actions, and there's probably much more expectation in. I think that's what we're seeing in the increase. There is much more expectation now that next time Draghi does not disappoint and is more specific around the measures that he will implement, and he very clearly is in the camp of additional measures for quantitative easing. So I wouldn't be surprised to hear something from him fairly soon, actually, and it will be that interesting situation for some time in the market again, where slightly disappointing news out of Europe will actually be quite constructive for stock market prices over here.
Boy, gold, the gold market here now trading
Right.
down under 1200. I did notice in pre-market trading that it touched the lows from earlier in the year. Stronger dollar, lower commodity prices. No love for gold. Do you see that turning around anytime in the not so distant future?
Quite frankly, not. So the two levels we were looking at for quite some time was on the upside, the 1350 level, on the downside, what was a range of 1215 down to 1230, and a clear break, hold, and retest of that level, and that's now what we've gotten as something that shifted my picture definitely much more towards opening a door to the bearish side. I know that lots of traders still look at the 1180 level, but quite frankly, on my chart, that's not something I prioritize. After that break of a 1215, 1230 level, I see quite some further opportunity to the downside, and there's just a lot of kind of story that went out of gold. There's not so much magic in gold anymore, especially when you trade it and you don't think about physical gold. I think there's probably still some demand for physical gold, but from a trading point of view, that demand really has gone away, and gold as the reserve currency probably also in confluence with the strength of the US dollar as a quite viable alternative. I don't see how traders would fall in love with gold anytime soon again. So probably at this point, if you think about trading strategies, if you want to touch that beast, I would be quite cautious, but it's probably more something for quite aggressive range traders. But the volatility in gold can be quite unpredictable. That's why I actually like to really stay away from gold on a short-term trading basis.
And the crude market, boys, had you want to talk about volatility? There's been some volatility in gold, volatility in crude, and just I'm gonna just ask you another question when you're talking about the crude, and you can mix this in after. A lot of people just won't trade those markets, and yeah, because there's volatility, but there's kind of, and I've talked to several different, traders, fund managers, investors, and they just kind of feel like there's like a little eye in the sky, that there's a few large banks or institutions that really control the order flow, and I don't want to say manipulate, but have a strong influence in the market. And some of these traders I've talked to are very, very skilled options and futures traders, and they're just like they just don't want to play the game.
Yeah, absolutely. And look, at the end of the day, wherever there's a lot of money to be made, and there is the technology out there, and there is an opportunity to how do you want to put it, to work in the market that it works into your favor. I suppose these are things that are going to happen, and we're hearing more and more stories that I think now the regulators are. I think they're still far away from being clever and really understanding what's going on in the market, but they're getting definitely a bit more aggressive, and you you would hope that kind of certain cases go away. But quite clearly, as long as there are market and market players, and at the end of the day, we appreciate deregulated markets, right? As long as that is the case, there will always be groups of individuals or streams of capital that will have an impact that is really just hard to measure, and you can't really make any sense out of that. So probably the only thing you can do is again, and that's kind of a theme also for the last two appearances I made on your show, you can only react by having your trading strategy and execute that on a consistent basis. That's what we preach in the trader coaching. And when you, for example, when you look at Mark Douglas's rules around consistency, really find your market. And that is now the answer probably to the crude question, or why do you touch certain markets? You need to find the market really where you feel that you have an advantage and a niche, and where you need to execute without hesitation when the market gives you a signal, honor your stops and your targets, and make sure that execution is fine, and not copy somebody else. And crude is just a market that I haven't seen a lot of retail traders really kind of immersing themselves into a way where they get the same, where they understand the characteristics in the same way compared to a euro US dollar or something they may be a bit more tuned into. But I've also talked to people who come from that oil industry. The oil industry in the UK is quite strong. BP is based here, Shell is based here. A lot of people actually understand a lot about oil and feel quite familiarize themselves with oil over their careers and feel quite happy to trade that. But lifting it up to the level, what does work best? Again, if you sense that you got an edge in a financial instruments, go for it. In the webinars we talked about crude quite a lot, and I had many traders come to me, ask a question: can it go any lower? And that was a couple of weeks ago, right? And we've seen what has happened in the market. And I said, look, if you are in that scenario in a market, technical analysis is really your best friend, because you just you put your levels on Fibonacci, whatever kind of floats your boat in terms of technical analysis. In our case, we looked at measured moves in Fibonacci, and then you can disconnect yourself from these underlying beliefs that make you pull the trigger in the worst possible moment, because you just believe and think a level cannot be reached. If you believe that, it's pretty likely actually that the market will go there.
Okay, and just tell us what's going on at the Trader Leadership Council. Do you have any? Have you getting any new people subscribing to it? Do you have any events coming up?
Yeah, absolutely. Thanks for asking. Actually, your show has been quite helpful, and so quite some interest coming out of the US. And I sat down with my head coach, Paul Wallace, and I think he will also come on to your show at some point in the future. And Paul and we decided for the Benzinga traders, if you want to reach out to me on tradersleadershipcouncil.com via the contact section, kind of the first 5 people who reach out, I'm happy to extend a very special offer for a 5 1-hour session one-on-one coaching to them, where we start to identify kind of your needs and your weaknesses, looking at the trading, looking at the psychology, and then kind of help you to understand the challenges and hopefully become a better trader. So absolutely. And probably not very convenient for you guys in the US. There's a couple of events in Germany, in Hamburg on the 25th of October, at the end of November, 21st, 22nd is a World of Trading in Frankfurt. So if anybody wants to come to Germany, be my guest, I'm happy to extend an invitation.
Okay, but nothing planned over here as of right now.
Not so far, but again, the US is from London is just 5 hours away. If he sense there's some interest, I'm happy to come over and bring Paul along and organize something.
Yeah, I don't know if you're signed into the chat room at all, but if you could get in there before the show ends in 10 minutes and put that link in there, I think some people would be very interested in that 1 hour review of the trade. It sounds like something that's very helpful, and we really appreciate it. We've had Malte Kaub on the line. He is head of the Trader Leadership Council in London. Also sharing his views on the markets, gold, crude, the DAX, U.S. equities as well. Thanks a lot for coming on the show today, and we hope to speak to you again soon.
Thank you, guys. Have a great day.